In the previous video, I showed you the overview of a bull and a bear market. In this video, we will learn how to quickly and correctly identify the market cycle stage using freely available resources and Excel. Knowing how to do this ahead of time and identifying the different market levels will get you prepared and help you stay consistently profitable. Professional traders at hedge funds and investment banks always perform this analysis and beat the market to it so that they are prepared to shift their trading direction when the right time comes. For us to be able to do this analysis, we'll go on the internet and go to any freely available resource out there. I prefer Yahoo Finance. You just simply type finance.yahoo.com and you'll be brought to this website. Here you have an overview of the indexes, and for example we'll do this analysis for the S&P 500 today. However, in your own time you can do a similar analysis for any of the other indexes out there. You just simply go onto the markets, world indices, and you can find the different indexes of the world available to you, and the data is freely available to anybody. So here is the S&P 500, the Dow, the Nasdaq, and so on. So we'll just click on the S&P 500 and go on to historical data. We'll need to adjust the time period. We'll go here to the time period and click on max so that we have complete data. Show historical prices, and in terms of frequency we'd like to see daily data. Now we'll just apply and just download the data. And when we download, I've already downloaded this, we can open it in Excel, and this is what we will be having. You can see that we have the date, the open, the high, the low, close, adjusted close, and the volume traded. You can use either of the close or the adjusted close. I prefer the adjusted close, so we'll just rename this the S&P 500, and we will sort the data to be shown from newest to oldest. Now we will select column A and column F, which is the columns for the date and the adjusted close, and go on to insert, and we'll insert a simple line chart. So this is what we'll be having. Let me just increase the size of this chart so that it's clearly visible. So here, this is the data for the S&P 500. You can see the market cycles happening throughout history, and we would like to zoom in a bit so that we can calculate the recent cycle of the S&P. We would like to know whether the S&P is currently in a bear or in a bull market. So let's zoom into 17, and we will need to adjust the value as well. So let's just put the minimum to 2200, and we can let the maximum stay at 3000. We can decrease the matrix a bit so that we have more accurate data, and that's it. So right now what we'd like to know what exactly the bear market level is. So here, for us to be able to do this simply, in order to calculate a bear market level equals, it is 0.8 times the year's high, basically. I think this equals, so let's just assume, okay, so a bull market level is 1.2 times the year's low. So this is how we can calculate a bear and a bull market. However, there are other calculations, other methods that can also be done in order to achieve the same result. This is basically math, and you can do whatever you find yourself being most comfortable with. So for us to calculate the bear market level, we would like to find out what the year's high is. So this point is the 2018 high, which is 2929.66. So in order for us, let me get my calculator. In order for us to find out what the bear market level is, we just go simply type in the year's high and multiply that by 0.8. So we can see that the bear market level is 2343.728. So basically we just go on and draw a line at our number, which we find 2343, and we just find that which will be around, like, right about around this corner at this point. So this is our bear market level. So looking at this chart, we can see that the S&P hasn't entered the bear market just yet. Even though a lot of TV forecasters and a lot of fake educators, and if you go on any other website that have a conflict of interest with retail traders, would tell you that the US has entered a bear market. However, that is, as we can see from our data, that is absolutely wrong. Recently, the S&P has broken down, which was the same case as it happened in February, and that was just a simple correction that has happened in the market. We can see that in February, the S&P hasn't reached the bear market level, and in recent times, in October, November and December 2018, the S&P has been really close to the bear market level, but we can see that it has rebounded now. So in February, there was this downswing and these rallies, and then the S&P started to grow again. And this could be the case for this recent period as well. So basically, what we'd like to know, we would want to know how to make the calculation like professional investors and not be misguided and misled by educators and TV news who have a conflict of interest with us. So in your own time, I encourage you to go on, make the same calculation for other indexes out there. You can get the data freely from any of the free resources that are available online, and you can simply do this calculation for all of the indexes, and you will find out which indexes have entered the bear market and which indexes haven't. I really hope that this video has helped you. I hope this video prevents you from being misled by other educators who have a conflict of interest with you, and that you have took home some important guidelines. This is actually the secret which keeps professional traders from losing money and staying consistently profitable. Thank you very much for watching, and I'm looking forward to seeing you in the next video.